Hi everyone, it's Stuart here again, and welcome to theproptrade.com and our latest webinar video broadcast for the non-farm payrolls today, Friday, the 4th of April. Hope you're all well. What a crazy day! What a crazy day yesterday. Massive volatility. Sparked by the Trump tariffs. And this morning, we've had retaliatory numbers out of China. China talking about 34% tariff backlash against the Americans. Obviously, China's been the biggest culprit in President Trump's eyes as far as imbalanced trade deficits are concerned. But the whole world got hit yesterday, even islands with just penguins on we're getting 10% tariffs from there. But anyway, huge moves yesterday. So some phenomenal moves on the stock markets. Apple was crucified, particularly, excuse my language, particularly yesterday, 9%. 9.25%. Apple was down yesterday. Amazon was off 9% as well. Meta was off nearly 9%, and Nike, with a lot of its manufacturing globally in Vietnam, its globalization model turned completely on its head. 14.44%. 14.44% Nike fell yesterday. So, and it isn't over. Futures are down again this morning. The Nasdaq's off 4%. 60% chance of recession. Some are talking 50% chance of a 25 basis point cuts from the Fed in 2025. There's Chair Powell has announced a speech at 14:30 London time. That's 15:30 GMT later this afternoon in response to the tariffs. What he can say, I don't know. Trying to placate things, but the administration, the Trump administration, remains very much. This is what we're doing. This is what we said we were going to do. Taxes will be next. Deregulation will be next. Although they haven't actually said that. There were the three pillars of their trading stool, if you like. And he's pushed very aggressively, doing what he said he would do. How successful it will be remains very questionable. It wasn't particularly successful in 2018, 2019. Certainly wasn't successful in the 1930s, and before that, it wasn't successful either. Somebody said yesterday the tariffs of the 1930s put the Great Recession. Remember, the Dust Bowl. John, what was his name? The story of Lenny and I've forgotten his name now. But anyway, it'll come back to me. The big recession, a Great Recession of the 30s, and here we are 90 years later with a similar move. So we'll see. Politically, it's very difficult as well for the president potentially. He's got this massive mandate that he's got, but quite a thin lead in the House and the Senate. Some of his core voters have been hit quite by these tariffs quite significantly. So, and if it actually fulfills its plan, it may be better for companies like Nike potentially to take the hit on the tariffs from imports from Vietnam and China and other parts of the world, Colombia and other parts of the world, say, than trying to reshore manufacturing back to the US because of the jobs, the wage differentials. But anyway, time will tell. All I do is trade the markets and give you my 4 pence worth for what it's worth. As I say, let's get rid of me. I look far too big there, don't I? This morning. So what we're looking forward to today? Well, it's non-farm payrolls and Canadian jobs day today. Expectations from the Reuters poll. I don't know if you can see. Yeah, I can see that quite nicely. 137. We had 51,000 last time. This will be interesting as well, the manufacturing sector, because that's what they were focusing on last time. We had this 10,000 lift in manufacturing jobs. And government payrolls also lifted last time. They want, obviously there's been the impact of the Doge issue. So let's have a look what that looks like in 10 minutes time. We'll have a quick look at the charts where we are at the moment. But really, it's really all about the tariffs. Even if this is like 200,000 showing a strong jobs number, that puts more pressure on what Powell might say later on in the day as well. That could then collapse quite significantly. They'd love to see this manufacturing number, another 10,000 this month. Certainly the Besant and Lutnick, the two drivers of this tariff policies. See what this looks like, say later on. Anything under 150,000, anything over 150,000 is really probably quite strong. The other numbers, as I say every month, I am really drilling down into things like the participation rate, the work week as well, permanent employees. Remember, there's been this big disconnect. Sorry, that's a Canadian number. There's been this big disconnect between. Sorry, the camera's down here, isn't it? Move the camera today. There's been this big disconnect between full-time jobs and part-time jobs. Part-time jobs had rocketed as well in the boom, and lots of people were commenting on that as well and seeing that was a bit of a drawback as well. The other one I look at in particular is this one here, this U6 unemployment rate. It's a much wider measure of the rate of unemployment than the headline U3, it's called, the main unemployment number, and that's expected to remain here, this 4.1%. So again, if this ticks up quite significantly, this went back to 8% last month as well. So the devil's in the detail. As ever, it's only 10 weeks since he put his bottom on the chair in the Oval Office, but it's been, what, 10 weeks it's been. Certainly not hanging around. We've moved really, really aggressively. Tariffs remains top of his agenda. So let's have a look, see what the wages looks like, what the earnings are holding up. 3.9% down from 4% last month, 4.1% the month before. So that's coming down, but we'll see how this all feeds through. This idea that goods inflation is coming back, services inflation has held up speed sticky anyway. So are we going to follow through with a big impact on goods inflation and following through to services inflation as well? So therefore, inflation going up, growth going down, hence this chatter of recession and increasing all the time. So lots of worry, and it's just the whole uncertainty and the chaotic way that this has been done and rolled out. Some of the lots of high profile and eminent economists highly critical of the formulas they'd use to create those. Is famous what will now be infamous, I would guess, or famous at the moment, but infamous in a few years' time, no doubt. The yellow and the blue and yellow reciprocal tariff board. But see again how it all pans out. But the very, very back of a fag packet type of excuse my English vernacular, but very basic sort of it looked like a complicated formula, but it's very basic, to be honest, how they create with this reciprocal tariff situation. So yeah, let's see how we go. Fiscal contraction, trade contraction, hiring, is it starting to slip? We had very good hiring starting to slip, but are we going to start to see layoffs? We haven't seen that yet in the data. Yesterday's where are we? Yesterday's where have we gone? Yesterday, wasn't it? Yesterday's challenge job cuts were ticking up significantly, but the new claims yesterday, continuing claims, but went back over 1.9 million. But the new claims remain. Where's the new ones? First claims remained better than expected, 220,000. That's still very strong. So it's still yet to filter through. But this impact of the tariffs and how long they're going to last is really going to come through in the next 2 or 3 months data. Obviously, the other thing that's happening now as we got to the end of the first quarter is next week we start seeing first quarterly earnings for companies, and we've had a massive move down from a very strong rally up, obviously in the stock markets, a massive move down. So let's have a quick, where are we? 5 minutes before the data. Let's have a quick look at where we are on the markets at the moment. So we've had a big old move in the commodity sector. I'm going to start with gold today. So we did have that new all-time high earlier yesterday, but also yesterday we went all the way down. Saying all the way down, we went down to 3,050 level. So very volatile day on all the markets yesterday. Gold's no different to anybody else. We closed the day lower. And we're down again today, and we're currently trading at 30.95 at the moment. So is this big strong rally over? If we just look at while we're on that, let's have a look at some of the other commodities. You can see a massive move today, 4%. This is yesterday, gap on open for copper. Copper, remember, a fundamental manufacturing commodity, and the announcement by China of the 34% reciprocal of extra tariffs on US imports has hit the copper commodities market generally, and another big 4% decline today for copper. Silver was down massively yesterday, 6%, and then another big decline today. So it's across the board, and platinum, similar 3-day significant move lower on the platinum market as well. So I know we only principally talk about gold in the metals market, but the commodities market shaken quite significantly. Now, if we go to the black stuff, we go to the energies, US oil, $62 a barrel. So this key $67 support. Obviously, we were over $70 earlier in the week. It was looking relatively positive here on Mondays. We closed out the month strong. Nice uptrend for the end of March, but see how quickly that has been wiped out on tariff day and then on the Chinese reaction. But again, this is what, sorry, I'm looking at the chart. I should be looking at the camera. Again, this is what the president wants. He wanted cheaper oil, didn't he? So here at $62 a barrel, it's where he wanted. But you know, $50. There was a commodity analyst on I was watching yesterday on Bloomberg TV, and he was talking about the price of production of oil now, even in the US pumped oil in the Permian. You know, that is down to $50 a barrel. So as I said yesterday, I think on the Discord, didn't I? I can't remember when I wrote that, but it was. I don't remember the phrase I used. It was the price of production, wasn't it? Yesterday, down at $50 a barrel. Yeah, see where we go from there. So big shakeout yesterday. Huge move down for oil as well. That $65 level just didn't hold at all. We came crashing through it, and we're trading at 62.28. You know, many cynics are saying, if we look at the stock markets now, many cynics are saying, you know, it's only going to be the rich people and Trump's friends that will benefit from this, because they're going to be the only ones with any money left to sort of invest at these levels again. But NASDAQ 100 down again today, another 3%. We're under the 18,000 level. The S&P 500 breached that key 5,500 level yesterday. Big move down yesterday. The actual numbers, we lost 4.48%. I'd say nearly 6% on the Nasdaq, the wider Nasdaq, and 4%, 3.9% on the Dow. The Dow lost nearly 700 points, 1,700 points yesterday. So huge moves in the last 3 days, and just show the Dow as well. Big moves down yesterday and again today. 39,500 has been breached on the Dow here on the futures. S&P 500 at 52.50 as well. So big moves, extended moves. Where will it all end? Well, it's the volatility's back, and as traders, obviously we like the volatility, but you know, I say I did take 2 positions last night. There we go. The data's out. Let's have a quick look at the data. There we go. Just come back to. So it's a hefty number. Look at that, 228,000. So it is a hefty number. That's going to be a real head scratcher for Mr. Powell later on. Unemployment's gone up as well, 4.2%. Hourly average earnings in line at 0.3 of 1%. And a decline in Canadian employment, but 228,000 for the the headline non-farm payrolls out of the US. Let's just update our calendar now. I'll come back to that in a minute and see how the dollar has reacted to that. So euro here, obviously a massive day yesterday through the 1.9 level, through 110, 110.75 at the moment, and lifting. As we said yesterday, our next extension is the 112 level, but the fib extension from the decline at the end of this last leg down was hit yesterday, and we're right at it at the moment at 110.90. So moving over, just skip this back to the 5-minute chart, see how we've reacted to the data. So data's just coming out now. So it's sort of lifting the dollar, if anything. The rally in the euro has cooled a wee bit. The Aussie got absolutely hammered on the announcement from China. We were long this, weren't we, overnight? Sorry, we were expecting this to go long, and it's reversed very aggressively. Got stopped out on that, and the Canadian position we had. So dollars, Aussie ticking up, Canadian dollar very mixed on that weaker Canadian number, and better than expected US number. So it's a massive headache, I guess. 227 pounds. Be interesting to look at the details of that actually on the details. Let's just scroll through this lot where we are. Wednesday, Thursday, Friday. Oh, it's calendar. So what's the other details? So earnings are down. The monthly were in line with expectations. Last month was revised one tick lower. Earnings overall is coming down. So earnings are starting to get squeezed. So jobs, those are massive. There's no hiring starting to slow. There's no people getting made redundant currently at the moment. So we'll see how it all pays through. Government payrolls 19,000. That's interesting. Manufacturing only 1,000 from the 4,000. Last month was also pared back from 10,000 to 8,000. Trump and his guys won't like that. Payrolls revised down from last month from 151 to 117. We were expecting around about 130, 40,000. Bank of America we're looking at 185,000. Citibank we're only expecting 95,000. So Bank of America 185 were close, but nobody was in this 228,000. So a huge tick up. This is interesting. Participation rate, although it's only gone up one tick, that's still a quite significant rise. So more people back in the jobs market or looking for jobs. Non-private payrolls. This is very interesting. Again, this will be the administration will take positivity out of this one. 209,000 for private payrolls, up from 116,000 last month, which was revised lower from 140,000. So these might get revised lower, obviously, again next month. And interestingly, also the wider U6 unemployment rate has actually slipped back under the 8% level. So that's a positive tick as well, although the narrower unemployment rate has ticked up and higher than expected at 4.2%. So March unemployment 4.2% from 4.1%. Private payrolls, that's a really interesting number, 209,000. They'll certainly dwell on that. Yields have moved back up from a big move down. The key 10-year yield broke that key 4%, which really was Bessant's target level, although he never said that out deliberately. That's definitely where he was wanting it. And remain there, 3.9065, 3.9065 for the 10-year, but it's ticked up a bit. And that's rolled over 39121 again. So moving around the yield curve. So yeah, that's a key positive number they'll focus on in the White House. The headline is a major surprise, 220,000, so more than nearly twice expectation. So jobs created in March. In February, obviously the March date, March jobs numbers ahead of the tariff announcements. So big beat on the 137,000 estimates. So Yeah, conundrums continue, but manufacturing weak. So this must be services numbers. I can't see a services payroll. So just let's have a look back at the chart. So dollar is up against the weak CAD here today. We look at the hourly chart. There we go. From the big rally for the dollar. The loonie yesterday, it's come back. So we look at the daily chart. That will look big down and then a move back up. So again, huge move down in 3 days, but a significant bounce for the dollar today against the Canadian dollar. Aussie dollar, big hit because of the their exposure to China and the 34% tariffs there today. I think we were long this last night we got stopped out we got stopped out our stop loss, but it obviously went a lot lower than that this morning. We went as low as .6050. The Aussie remains down today. It's ticked up on the payrolls number. CAD, we had a look at the yen, major move down yesterday, big beneficiary of the yen yesterday. So this is the hourly chart. We were down. That's interesting. A big old move here ahead of this morning. There's been changes in South Korea, hasn't there? So yeah, so 145.45, and again, look at the daily time frame on that. Looked like the dollar was improving, didn't it, to the end of the month, and a huge shakeout yesterday on the tariff announcement. And down again today. The low today has been 144.50, so under 145 level. I say we're down to these September lows for dollar yen as well, but still relatively high in historical terms. Euro 110.35. Let's have a see if it's reacted in. We're now 10 minutes into the data, but really it's the yeah. So we were down and then down again initially. So it's still bid, isn't it? To the upside of short term here. It's a bit of a move. So we've moved from 108 to 1082 down to 1040. So a 40 pip range on the non-farm payroll data for euro. It's not something to get too overexcited about. And sterling 130.20. And again, we went to 130.50 and down to 130. So it's a bit of a bigger range there, 130.12. So it's a 40 pip range also for sterling. But again, bias to the upside here on this 5-minute chart with support at the big fat round 130 where the 50 period moving averages, and we're testing back into the 20 period here on this 5-minute, but we've tested it a few times over the last hour or so and we've lifted up. So the main data of the day is obviously out. So again, can sterling hold 130 for the end of the trading week? That's what many are looking for, having got to over 132 yesterday, big 200 pip decline as dollars come back this morning, having been quite hammered yesterday. But yeah, what can I say? It's all kind of come out in a wash. So trade your system and strategy if it doesn't fit because of what's going on with this massive announcement yesterday. Sit on the hands. I was in two minds whether to take any trades last night. There was other things triggering which I could have taken, but we just took the two on the major dollar crosses. I say both of them. The Aussie actually hit stop loss. We'll just bring this up, show you. If you don't follow me on Discord, why not? Whoops, there we go. It's here in my trading strategies blog is where you want to find us. So last night, I say I was in two minds whether to put anything up. No, that wasn't last night. That was earlier in the week, wasn't it? We were short dollar CAD and long Aussie dollar. The Aussie absolutely smashed through the its stop loss, so we lost 47.3 pips. And this morning, around about 8 o'clock, similar sort of time, after that had already hit stop loss overnight while I was asleep, I closed the dollar CAD position as well, and that was a 36.4 pip loser. But we're still up 1,079 pips or points for the week. US futures stock markets still remain very weak, although they are off their bottom. So they're not as bad as they were. Indexes have ticked up a tad here. So we look at the most volatile of all, which is the Nasdaq here, the 1 hour. So big move down here on the 11 o'clock candle. We moved even lower to 17,677. Headed the payrolls, and we've ticked up again. We've got the 5 minute. What time is it now? 5 minute chart. You see the two. In fact, we would it's come back down again. I thought it was going to. I thought stocks might have lifted a wee bit, but even though we got a strong jobs number, the immediate reaction was actually negatively for indexes. So looking ahead to the earnings starting off in the next week or so as well, it's not great. So this lack of clarity, not lack of clarity, but the upending of the World Trade Order, obviously the impact of the fiscal changes, the Doge changes, but interestingly, I'd say the manufacturing numbers haven't followed through yet. So this is the first real test, I would argue. Or you could say, it's still a bit too early. It probably is. So next 2 months certainly will be the impact of the Doge changes start coming through. Obviously, a lot of people are still staying on till October. That was one of the deals that Musk came up with as well. But this manufacturing number revised back down from last month, from 10 to 8,000, and only 1,000 additional manufacturing jobs in the depth. So this 228,000 new jobs. How many of them is part-time? Look, participation rates ticked up as well. So it's clearly a private sector with the 209,000 here. So it'll be interesting to see where that spread comes. I haven't actually got that level of data. Let me see if I can find it on my Reuters feed here. As we go, bear with me a second. I'll have a look. No, it's nothing. So I have to go back to the. If I go to the, I'm just going to go to the Bureau of Labour Statistics. As okay, so interesting. There's a comment here from Bank of America that the poor weather in February and that may have suppressed employment for February, so it's bounced back in March. Okay, so leisure and hospitality, for instance, they're using as an example. It was a -17 for February, and it's coming at a +43 as an example. So maybe a bit of an outlier because of the state of the US, North America, US weather. North America weather particularly impacting the US. So, okay, so a little bit more detail here. So full-time jobs have come back in at +494,000 from a negative 1.1 million in the previous sector. So that would account for that. And also the household survey, we talked about this earlier in the week, how the household survey would look. That's coming at a +201,000 from a negative 588,000. So that explains the variance. So the household survey is much better than expected. Wages continue to eke lower. Last month it was moved down. It was in line this month, but the annualized numbers now slipped again to 3.8%. So that's suggesting, there may be more pain to come, and as costs, as goods go up, potentially, or certainly the goods are going to go up, because the immediate impact is they kick in tomorrow, obviously, and then the 9th of April. So it's only a matter of days. So this will start kicking in. So rising inflation, lower growth, and this chatter of the Fed having to cut rates, not because the economy is growing, but because they're worried about recession. 5 cuts by the year end. Say some analysts are talking about a 60% chance now of recession. Obviously, this is all chatter and sentiment and ideas, which may or may not come to fruition. But the outlook is not great, even though that's quite a strong jobs number. It's a technical bounce because of the weather, but that's a significant number as well. Significant beat this 228k. So anyway, more on that as I get to read the detail. Guys, if there's any questions or any assets you want to have a look at, please let me know. I'll just have a quick run through the charts again as we wrap up what it is an absolutely phenomenal week as far as markets are concerned. As I say, we nicely in the money for April. 1,000 and no, we're now under 99. I've just done the maths here briefly. 995.3 points we're up for the week, thanks to those big moves in the stock markets. Those trades we had on earlier in the week. Percentage wise, we were up 3 and a bit percent as well, which is the most important thing. Wow, yeah. The momentum's not great, but he's determined to push this through. So where are we now? Nasdaq at 18,000, S&P 500 at 52.50. We're still 45 minutes before the cash open, and the Dow sits at 39,500 or under 39,500, remains under pressure. Over in Europe, the DAX is at 20,880. So again, another down a day today. We've got the daily time frame. Big down day yesterday. Also on Wednesday, that key breach of the 22,000 was a bit of a, but we were already suggesting we were short, given we were under the 20-day back here on before the end of the month, having been up to these all-time highs just a week earlier. So big shakeout, and as ever, markets sell off much more quickly than they go up. Next big line in the sand, which we've already tested today for the DAX, is the 20,400 level. We talked about that yesterday, didn't we? Before the end of the, we talked about it at the end, towards the end of. I keep staring up there where the camera is. 20,400 is the next key resistance area. Let me see that there here. Area here for the Dow, sorry, the DAX, excuse me, and we've been in to test that already today. So see if we continue to move down, but that's 3 big negative candles, 3 black soldiers, as we say in candle speak, big bodied candles to the downside, negative under the 50-day moving average. I've got a 200-day on here, but big decline here. And seeing the RSI, the MACD signal, so it's all trending lower. The the UK stock market, the FTSE 8,150, a big give up as well. It's reacting even more aggressively today, back through the 8,300 area. So there's that round number and resistance areas we were moving up here at the end of 2024. I'm miserable really year, but there's a big resistance area, or had been. We breached that in January, and then we rallied all the way to 8,900. But again, a big not overreaction, but a big fundamental reaction to the changing trading world that we are moving into. The UK, remember, it's sort of more or less in balance with US imports and exports. So a 10% tariff, the bottom line, but it's still 10%, isn't it? On supposedly the special relationship, your special neighbour across the Atlantic. But anyway. Trump's feels the US has been ripped off, as he calls it, for many years, and the whole world's paying for it. Even poor old Madagascar with its vanilla exports tariffed at 47%. So as ever, the poorest countries are being hit the hardest, and will feel the impact the hardest. Sub-Saharan African countries very, very, very badly hit, and some of the poorer Asian markets as well, very, very badly hit on these tariff wars that's going on, trade wars. Let's say for what it is. If the 2 biggest economies in the world are slapping tariffs on each other, that's going to be a massive impact globally, and that's going to ripple out not just in immediate neighbors in Asia and North America, but globally, and we're all going to get caught up in it. And that's why it's so important, what the President of the United States does and says in the policy. But how long this is going to go on for, knowing the volatility of the nature of the president, it could all be turned around in a couple of weeks, but it doesn't look like so at the moment. Big impacts. How low does he want it to go? He obviously hasn't mentioned the stock markets at all in the last weeks or so. Obviously, he was ramming on about them constantly in his first term. It is what it is, and he would say, and this is what he was wanted. People to come knocking on his door with a begging bowl to try and renegotiate. It was the phrase he was interviewed going down to Florida last night, saying, if countries come up with what did he say? I can't remember the word he used now, but it was along the line of a phenomenal deal. We will reconsider it, but we'll see. Anyway, so yeah, UK markets down. It's interestingly, gold continues to be less volatile than others. So this big bid yesterday, we saw the certainly profit taken from the big move we had, but then I think we were talking around about this time yesterday, weren't we? Is it 1 o'clock candle? It was yesterday. We were down to this this level we talked about. In fact, where we are now, this 3080 level. Yesterday, we then went down to test the 3050 level, and then turn around really quickly. But now that's all been sold off again, and we're now back down to 3080 again. So are we going to go back to 3050 to close out the week? You can see you see these here quite nice on this 1 hour chart where these congestion levels are, these points of control. So 3080 is where we are now, and 3050 is the next one to the downside. Is that going to be tested again for the close on Friday? We'll see. But we have had a big down candle here, so that might be that low might hold. We may drift back higher into the close of the day, but obviously we've still got the whole US trading day to get through yet. So there we go. I'll leave you with the calendar for today. There's big surprise, to be honest, on non-farm payrolls. A lot of it may be explained by, I say, the household survey was much better than expected, and the full-time jobs was very significant flip around. Could been the fact that the weather was so bad in February that suppressed the February number last month, which is why Bank of America come up with that 185. But even we're closer to 230. It's still 45,000 more than the Bank of America were talking, and they were the top end of the major Wall Street banks. Say Citi were down at 95,000. Consensus was around about 140 for the NFP this month. So let's have a quick look for later for next week. Obviously it's Easter week for those of us celebrating. Let me just let's go next week. The markets, the US celebrate. Markets are closed on Good Friday. Europe and many of the other, like Australia, also closed the following Monday. So the markets are closed on the 11th. Let me just apply that and see for next week. There we are, 6th. So relatively quiet as a normal quiet Monday. I'm doing a training video on Monday. I can't remember what I said I would talk about on Monday, but I think it's about 6 o'clock Monday evening. We are doing, I'll find that in a minute as well. So relatively quiet Monday. Tuesday, also not particularly busy. So I think I've got another one as well. The only thing is the private oil inventories earlier than usual on Tuesday, as normal on Tuesday. We have got the RBNZ expected to cut rates on overnight Tuesday into Wednesday by 25 basis points. Obviously, something to say about the trade impact. Interesting, I've got India on here also talking about cutting rates by 25 basis points. Obviously, massively hit tariff-wise by Trump yesterday. As far as the US data on Wednesday, it's the official inventories, oil inventories, and that's a really key thing. Interesting 10-year note auction as well. That'd be interesting on not normally a 3 high impact event, but more so this week. Thursday is weekly claims as usual, and some kickoff of US inflation as well on earlier on Thursday. And weekly claims, I say, on Thursday. So Thursday is the real highlight for the data next week. Friday is Good Friday, and many markets are closed on Good Friday, the 11th. And although there's still data coming out, or scheduled data come out, PPI from the US, CPI from Europe and Germany, and then the Michigan. That'll be really interesting as well. See what these Michigan inflation expectations and consumer sentiment feelings are like. And the sentiment feelings, they're the first reading for April. So these will be quite interesting on Friday next week as well. So a relatively quiet week. Obviously, the earnings also kick off the following week. Some will start next week as well. So that's all data getting chucked out. But obviously, the main focus will be the remain in Washington and sorry, remain in Washington and Mar-a-Lago, and anything the president is got to say at his signings or his is on his Truth social media platform as well. So anyway, that's all for this week. Take care, everyone, and trade carefully, especially in these very volatile times. Obviously, we like volatility as traders. If you're not with us, why not? You know, it's a really nice platform, the Trade Locker platform. Come and join us. The products are very straightforward. Whether you're taking a single phase challenge or the standard two-step challenge, whether you're a pro trader, whether you're a beginner trader, you know, you can become successful if you have an approach that works for you. So here, a one-step challenge, you need to make a 12% target. You can lose overall 7%. Here, if we go to two-step challenge, you need 8% profit in step 1 and 5% in step 2. Maximum drawdown 10% on both steps. Either time, you know, you'll lose it. But you know, the key thing is you got to follow the rules, whatever type of trading you're doing. Whether you're trading with a prop market, whether you're trading with a traditional broker, whether you're trading CFDs, futures, options, whatever type of trading you do and that works for you, you've got to do something that works for you. So the beauty of the proptrade.com is that we can offer you, you know, for a very small fee, $55 gets you a 5,000 amount of equity. A few dollars more, $175 gets you $25,000 of equity to trade and to play with. And that's what it is. You know, it's a simulated account, so you can test your systems, test your strategies. It's not costing you very much, you know. But if you find something that's working for you, you know, you can make real money very quickly, because going to the two-step challenge, you know, there's no, you know, you can do it within 3 or 4 days. If you're in that sort of rush, if you want to do it in 3 or 4 weeks, that's also up to you. But the point is, you know, you make real money on these simulated accounts, and you make, you know, 80-90% of the profit comes back to you, and you get paid within a week. You know, $175 gets you a $25,000 account, and at the moment, you know, if you open a challenge, you know, if you put it in, you see on the scrolling there, if you put in SC25, that gets you a 25% discount. SC25, that's that coupon code there will get you a 25% discount. I think the EAD discount, correct me if I'm not, I'm sure the marketing guys will tell me, but I think our EAD 30 is still working this week, as it's the EAD holidays for many of you. So that would get you a 30% discount off these very aggressively priced or competitively priced challenges anyway. So you know, come and join us, guys. And I'm here to help. We're all here to help. We're very open, very transparent. We are the grown-ups in the room. We've been around a long time. We know what we're talking about. We're part of this business. We're part of this industry. We're not just, you know, startups that have got still wet behind the ears. We've been around a long time. So come and join us. We'd love to have you on board. And I want you to be successful. We all want you to be successful, because we're successful if you're successful. It's as simple as that. Okay. Have a great weekend, everyone. Stay safe and peaceful, and all the best. And I'll see you on Monday. Take care, everyone.